Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. John Riosty, American Banker. John, thank you so much for joining us. John, I don't know why we keep having you on. There's no news, is there?
There's no news. No news is good.
Well, we may have a couple stories that we want to address. John, we appreciate you coming on. Katie, as always, good to see you. And let's get to it. We're going to talk about a bunch of stuff, but one of the things that came up yesterday is it's not required, but how many of you are requiring the 2020 tax returns for PPP loans? There you go, 20%. What's interesting about their response, John, is that lenders every lender I talk to, they're above and beyond the minimum documentation SBA is requiring.
Yes. Well, I know it's an important document, but I also know there's some question as to when IRS will require the 2020 tax reports.
Didn't they change it yesterday, May 17th?
They may have done that. I was a little bit behind times. I know they were discussing it.
They did.
April. I filed
it is May 17th. Do you need to check the franchise registry for PPP loans? Franchise registry is run by SBA, and you go in there and you know that is a valid franchise agreement. They are eligible for SBA 7A and 504 financing. My question is, do we need it for PPP? They check it. But the answer is no, you don't have to do that. Correct, Katie?
Yeah, as far as I'm aware, I don't believe you need to check it, but it is a good practice, definitely. And I'm imagining a lot of these banks probably, and other lenders, probably have a best practice to do so. And that's why we have such a large yes.
Yeah, there's no downside to it. And to check it, obviously, it's an easy check, but it is not a requirement, just FYI. Finally, what NICS industry received the most SBA loans in 2020? Plumbing, gas stations, insurance agencies, landscaping services, and fitness and recreational sports centers. Now, this is as of it makes a difference. Fiscal year ending September 30, 2020. Obviously, hotel restaurants are number one. That's why we excluded them. John, I'm going to let you guess, and then I'm going to let Katie give the answer.
Well, too late, Bob. I would have guessed gasolines with convenience stores, though. I will tell you that.
Very good. Katie, what's the answer?
Yeah, the answer is landscaping services, which actually surprised me, too, because some of those, like the fitness and recreation, I would have guessed that would have been way higher. But we are talking in loan number, not loan dollar amount, so that might have tricked some people.
Okay. Very good. And obviously with the pandemic, there's been a lot of HVAC contractors and a lot of other contractors who are doing very, very well. And landscaping, I would not have gotten that as well.
I wouldn't have gotten it either. I would have, as I said, I would have guessed gas stations with convenience stores, but that's an interesting result because what it indicates to me is that the Schedule C filers, the so-called Schedule C filers, or in this case, very small businesses, were already sort of capping the program even before the changes by administration. I'm going to guess a lot of those landscaping services are very small businesses.
Right. And, a lot of nurseries and a lot of, as you said, probably one or two-person operation. Yes. Katie, what's the Inspector General telling us? Why is this important to us? There's $700 million of duplicate loans being issued. Why do we care?
Yeah, so this report came out earlier this week, and it's really only looking at that first and second allotment of PPP funds. So this is ending in August. They haven't quite gotten up to date with the more recent issues yet. But this report found that there's a significant number of duplicate loans that got approved and duplicate payments, disbursements specifically. So you've got 4,260 borrowers who received more than one PPP disbursement. That totals about $692 million worth. The OIG is looking into why that might have been, and they are suggesting, at least in this report, that a major indicator of what's causing that is those bulk loan processing early on in the process. It allowed certain loans to get through that already had a loan, already was approved, things like that. Another reason for it was ETRAN was not originally set up to detect multiple EIN numbers and match them. So that was part of the problem as well. And there was a short period where there was an error on the SBA's coding side that was supposed to catch this. And there was about 14 hours in which it was not working properly. So the OIG is, of course, recommending that the SBA review their loans that got these improper payments and, of course, take appropriate measures to fix that if they can.
Well, the good news, Katie, is how much of this has been recovered, how much has this been discovered and recovered?
Yeah, so they were originally estimating that there were about 40,000 loans that got these multiple disbursements. It looks like they've already recovered quite a number of those. So it is something that they've definitely fixed most of, but there are still some outliers here that it's still a pretty large number that they need to at least figure out if it was just an error or if there actually are duplicate loans on these.
Katie, were these loans made by the same institution, or is this an instance where the borrower applied to multiple institutions, received multiple loans?
I'm guessing that, of course, they didn't go too in depth with it, but I'm guessing what happened is they did apply it 2 places, and because of that bulk loan processing, it got passed through on both ends. But they didn't really say whether it was or not.
John, what do you think? What do you think what the issue was here?
Actually, Katie has explained a lot. When I first saw this, I was surprised that the numbers were as low as they were, because I've talked to a number of bankers about this, and you know, they talked about the in the first months of the program, the sort of frenzy around the country. You know, obviously it played out in banks working 24 hours a day and sort of turning into production facilities. But, you know, for the borrowers who were desperate, it turned out, you know, if you know, they'd apply to a bank, they wouldn't get, you know, word or information as fast as they would like, and they would turn around and file a separate application. Their businesses were on the line. So, you know, that's a lot of it. And I suspect that plays into why so much of the total, the original total that Katie referenced, 40,000 plus loans, has been remediated, because those borrowers weren't fraudsters. They were desperate business people. And that I suspect in many cases, they, you know, when they got the extra loans, they put one of the payments aside and you know, returned it. So that's a guess on my part. It's speculation on my part. But I think
that's a fair assessment.
Right.
Hey, John, you're talking to a lot of bankers who are frustrated with the system, frustrated with that. But you had an amazing article about another lender, I believe it was First Interstate Bank, who said, "Hey, we didn't know how to spell SBA. We didn't want to know how to spell SBA, but after doing this PPP, we sort of like what's going on." Is that a general consensus? And tell us about the specific First Internet Bank.
Well, what that story was, they're a bank. Obviously, they're an online bank in Fishers, Indiana. They go back to 1999, so they're one of the first online banks in the country. And I guess now, obviously, one of the oldest online banks in the country. And up until 2019, they had a minimal involvement with SBA. They made the decision in late or at some point in 2019 to become involved. They brought on a team that had worked at another bank. They brought on an SBA team to their bank, and that's right. kind of where things stood. Then COVID hit. They became as many banks, a big PPP lender. But now that COVID is sort of not COVID rather, but PPP is phasing out, they are really putting the gas on, stepping on the pedal for SBA, and they expect, I don't want to say they expect, but they predict that they very well could be in the top 10 7A lenders by the end of the year, this fiscal year.
Well, what's not to like? You have a 90% guarantee. Fees are being waived. Yesterday, we had a report that the secondary market, John's well over, well, not well over, it's 122 on those larger loans.
Right.
Which is an amazing return for the lender. And that's certainly an inducement for getting money out to Main Street, which is what the goal of all of this is.
And what will be the effect, if you look at First Internet as a model, or at least as a sort of a prototype bank, I think that the decisions they made are being discussed and perhaps, acted on at lenders around the country, banks, credit unions. And I talked to some sources, and one of them said that he would be surprised if the 2021 total, 7A total, lending volume by dollar, is not significantly above 2020's. And that's something, because right now we're running just under 3% below the 2020 pace. I think through March 12th, it was about a little over $9 billion. And that's slightly below what it was last year. But what they're saying is, and he wasn't the only one that told me this, is that by the end of the year, by September 30th, it's going to leapfrog, and it's going to be significantly above the 20 billion or so that was made last year in 7A loans.
John, what's the major, or not the major, but one of the factors in how they approach this business than the traditional brick and mortar type of lenders? What are they doing differently that's causing the success?
I think it is, as the CEO at First Internet said, David Becker, I think a lot of it is certainly a greater openness to banks and lenders to making these loans, but in the marketplace, a greater openness to applying for, and if you remember, maybe about the 2015 timeframe, that's when the so-called fintech lenders were at their height. Small business lenders offering 24-hour turnaround on loans, and all of that money theoretically could have been 7A money. A lot of it could have been 7A money, but I guess the thought was a lot of lenders were just not patient enough, or with the SBA process, with paperwork, with time, et cetera. And now, probably in many cases because of PPP, there's certainly a far different attitude.
I know one of the things that I'm tracking and we're all interested in is what's going to happen long term. How does this, as vaccinations take hold, and it looks like we're turning the corner, what's going to happen in terms of changes to our culture? And I think one of the huge changes now, lenders and borrowers have an appetite for doing the stuff online. They had to. The banks were all closed, and so they were comfortable online. And now they're more than comfortable in saying, okay, I understand the concept of giving my social security number on a secured app, and I'm willing to do that, as opposed to walking down to my neighborhood branch.
There's that. There's also the issue that for a lot of customers, their neighborhood branch isn't there anymore because of their comfort.
Well, yeah, that's true.
Online. And just the other economic things for the next year, probably, I suspect it will go beyond 2021. And we're talking right now. I'm talking specifically about the enhancements to SBA 7A and some of the the enhancements to 504. Mainly that one, the 504 Express, but specifically the 7A enhancements, 90% loans, no fees. It's even without the 11-12 payments, which I know that's an issue that may or may not be addressed again by Congress. But even as that money, runs out, it's still an extremely attractive offer right now, an extremely attractive proposition. And businesses are going to continue to need operating capital. You know, they took a huge hit with COVID. The economy is recovering, but they need working capital, and SBA 7A is sort of a perfect prime place to get it, to access it.
Hey, most institutions have a subscription to American Banker. Be sure and get on that distribution list. Be sure and read John's articles. John, you do a great job in covering this niche. And you always bring up stuff that I don't think about and we don't think about a lot. So, I mean, that's great when you can offer that competitive analysis in terms of what trends are. That's what we're relying on. This is a good job. Katie, what's going on with PPP? Are we gonna get the extension? When are we gonna get it?
Yeah, so yesterday there was a Senate committee hearing to examine Paycheck Protection Program, and they were addressing the extension. They looked at, they had multiple witnesses who gave testimony saying that they needed that extended past that March 31st deadline. They also acknowledged that there is a letter signed by 90 trade associations urging Congress to pass the PPP Extension Act. They didn't say whether they are going to pass their version of it or the House version. Like we were discussing yesterday, there are two versions of this. It's essentially the same bill. It's just so it really depends. The House one did already pass in the House, so it would be the fastest and easiest way to get it passed and extended if they just passed the House bill. But this was just a committee hearing, so they aren't actually going to vote on that until it reaches the entire Senate.
John, this is going to be done by the end of the month?
I think it will be done by the end of the month. I think if it isn't, you know, the delay, you will be short enough that it won't really matter that much.
Okay.
So
I agree with you. It's I mean, this is really much in the weeds in terms of how the sausage is being prepared. It's going to be done. It's just a matter of when. So, hey, Katie, I want to address. Go ahead, John.
I was just say, you know what, you know, maybe possibly what the Senate is thinking about is, you know, will they bring other sort of related issues, and theoretically they could address the 11-12 money. You know, the fact I think they just allocated about $9 billion, and a lot of that is gone. And you know, the lenders, the borrowers would like more, but. On the other hand, as Katie said, the House bill is done, and if the Senate were to simply ratify that, it could easily be done by the end of the month.
John, you raise a very critical point. Access or capital for Main Street will not cease. It will continue to get out there. Nice segue into the restaurant revitalization. Katie, there was a quote yesterday that said what? Yeah, so there's a quote from Oregon. What is this, a representative, I believe, saying that they believe that the restaurant revitalization fund is going to be available within weeks rather than months. And I believe last week we were discussing how this really could take, several months to get in operation. And luckily, it sounds like they're wanting to get this up and running as soon as possible, which will definitely help a lot of restaurants and bars and places like that have had a lot of struggles during the pandemic. So this would definitely help them significantly. John, you mentioned why in the world are we putting money into a community navigator program when there's no program to support, and that's your tell that there will be future programs. And here it is that they're going to use SBDCs, SCORE, Women Business Centers. They're going to fund those organizations which are already in place to go out into the community and let people know, hey, this is available. So I don't have an issue with these dollar amounts given the total scope of what's out there, and education for Main Street is very, very critical. Very good. Let's see. We have our franchise reports. They are done as of today. We got a couple orders. We're going to fulfill those. The order form is attached in your GoToWebinar box, so click on that and just call us or fax it over. We've put a lot of work into it. John, I'm going to send it to you. I'd like your feedback on it. We've changed it. We've changed it quite a bit this year. First thing John said, well, delinquencies there's no delinquencies. I said, you're right, John. That's why what we did is we showed the traditional 10 years as we always do, but we went back and did 7 years, 2011, 2018. We had plus we took the 25 top franchise and NAIC codes and gave them cohorts by the year. So if you want to know restaurants, instead of taking that flat percentage, you can go back, okay, how did loans perform that were made in 2015? And number of loans, dollar amounts, charge-offs, paid in full, whatever. So I think it's much more information. John, it's tough putting this together because you want to give summaries of information and you want to give the backup, but you don't want to give the whole Bible. So that's what. Hey, John, thank you so much for joining us. I appreciate it as always, Katie. Stay cool and dry in Seattle, and we'll talk to you tomorrow. Thank you for joining us for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.